Okay, welcome everybody here to Healthcare Leadership Live. I am your host, Mike Lyons of Seasoned Advice HR Services, and this cast is sponsored by Seasoned Advice HR Services, which helps small and medium-sized businesses with HR support. And I'm thrilled to have you guys joining us here today, whether you are tuning in live on LinkedIn or on the recorded podcast. Our goal here on this show is to educate leaders in healthcare and service-based industries on how you can be a better leader. And that could include HR or marketing or finance, but we want to give you tips to be a better leader. And today's guest fits right in with that. His name is Steve Ney, and he is a tax pro that helps solo entrepreneurs and small businesses just getting started out to get their businesses set up and to be prepared from a bookkeeping and tax standpoint. And so I think that'll be of great use to our audience. So, Steve, thanks for joining.
Thanks for having me. I'm excited to be here.
And I'll also say for those listening to the show live on LinkedIn, if you have a comment or a question, please put it into the chat or put it into LinkedIn and we will address it right here. Let's just go ahead and get started. Steve, tell us about yourself. Tell us about what you do and why do you do this crazy stuff with taxes?
Sure. You gave the elevator pitch already. Soloists and small businesses, I do taxes for those folks and their owners' personal taxes as well. The way I got into this is I enjoy doing taxes, which is, I know, a little weird. So my wife has run a few businesses over the years. She's got a piano studio, some other things. Other folks in my family are entrepreneurs as well. And so I've had a lot of exposure to how do the taxes work for a soloist business,
Mm,
specifically like a Schedule C on your Form 1040 taxes. So I understand that part really well, and I like working with those folks, especially when they're just starting out, teaching them how things work. How do you grow into it? What do you need to be keeping track of, be aware of as things begin to scale up? So that was my into it. Is I enjoy doing that aspect of taxes. I went and got the enrolled agent credential, which is you have to pass a bunch of IRS exams to prove the tax law up to a certain standard. It's like a CPA, but specifically just for taxes.
mm.
It doesn't include all of the audit and public accounting things that a CPA will also have. Enrolled agent is the name of that. I always have to explain that because nobody knows what it is.
Yeah.
It's an obscure credential. CPA's got great marketing, but enrolled
Mm.
agent does not so much. Point being, tax professional for that size of a business, that's the part of the tax code that I know really well.
Okay, awesome. Taxes are things you've got to think about, and it starts when you're setting up your business. I did that not that long ago, went through the whole LLC formation stuff. Is that something that you help businesses with? And, what is something that people need to think about when they're doing business formation?
Sure. I don't help directly with the registering the LLC, getting the operating agreement set up, those kind of things. That's more in
Mm.
the lane of business attorney. Some of it you can do yourself, or you can use services like Zen Business. Is that what it's called? Maybe.
LegalZoom
Those
is one, I
Legal
think. Yeah.
Zoom. Yeah, yeah. But for like the tax implications of those, I can certainly speak to all of those issues. But generally speaking, yeah, LLC is a good idea for the liability protection aspect of it, but it doesn't make a difference on the taxes. If it's a single owner, whether they
Mhm.
operate as a sole proprietor without a legal entity or as a single member LLC, it all rolls up the same on the tax return.
Okay. Okay. Good to know. I don't even remember how I did that. I should probably read up on how I did all that. What about like the S corp? Is that something that you've seen people do? Does that have tax
hmm
implications? And
It does. An S corp is quite different from a tax perspective. It
mm,
starts underneath as an LLC, just what we were talking about before. So that's the legal structure underneath it, and then on top of that, you make a tax election to be taxed as an S corporation.
mm,
And what that means is the LLC now has to file its own tax return. It's a separate legal entity, and also from the tax perspective. So it files a Form 1120S, and then the owner gets both a W-2 because you have to pay yourself on salary
mm,
as the S corp owner, and a K-1, which says if you took any other distributions out of, if you took money out of the business on top of your salary, that shows up on the K-1, and then those two things go to your personal taxes. So the main difference there and why folks like S corps is if you are taking a lot of money out of the business, but the salary that you would have to pay yourself in reasonable compensation, which is if you had to hire somebody to do your jobs as the owner, how much would
Right.
it cost to pay them? If the difference there between those numbers is large enough, then you can save a lot on payroll taxes in that difference between the two numbers. And so
Mm,
that's where it can make sense to do an S corp, because even though you have to do an extra tax return, you have to run payroll for yourself, there's a few extra compliance costs like that. Those are smaller than the amount that you save on taxes.
gotcha.
It's not a one size fits all solution. It doesn't work for every kind of business. You have to have certain kind of revenue levels before it even makes sense to consider it.
Yeah.
And it's hard to roll back once you choose it. Be very careful that is what you actually want to do long term before you
Mm,
make the decision, but it can be a really good tool for a lot of folks.
okay. Good to know. Good to know. And I'm guessing that you can help folks make that analysis if that's a
Yes.
good thing.
Yep. Yep. Whether you've got an S corp already or you're considering it, yeah, I can help you either way.
Yeah. So what I'm just curious what led you to start this? Because I was looking at your website. You've got an IT or technology background. Why do this tax stuff?
Yeah, that's an interesting question. My background is in software development, like you say, and I
Mm,
still have a day job doing that in a cybersecurity research firm. So this is a side business for me at the moment, and it's growing slowly. It's a nice balance where the day job pays the bills and I can afford to let this grow slowly and make sure I'm growing the right way, finding the clients that I really enjoy working with. The reason that I did it was to to have some optionality of here's a lever that I can pull. I can scale this up or down to kind of balance against the market trends in IT are sometimes they're up, sometimes they're down. I feel plenty secure in my current job. It's
yeah.
nice to have, and just being able to build something that's all your own is fun. I found so
Yeah.
I'm enjoying it.
Yeah, I love that. And as a entrepreneur myself, I can identify with that. And I think a lot of the folks that are listening here can identify with that. Maybe you're thinking about starting a med spa, or maybe you are a doctor who wants to go independent and create a practice of your very own. I've met doctors like that who are like, I'm tired of dealing with the corporate medicine thing and I want to start my own primary care thing. And direct primary care is a newer method that doctors are finding that they can have more time with patients. And so doctors, I think, are wanting to go out on their own more. So I see a trend with that. And so they're going to need help from folks like you, I think.
I've been hearing a lot about like corporate consolidations buying up the smaller practices lately. So that's interesting that this trend is also going the other way as well. The folks that don't like that, where they end up.
Yeah, from what I understand, there's a trend of doctors wanting to pull back from those agreements that they've set up. Maybe they've sold to a larger business, but they've realized, you know what, this is not what I thought it was going to be, or I don't like the way it's being run. So I want to get out and I want to go back independent and work for myself. So I think there's going to be a trend, and actually, there's been states that have passed laws to limit the influence of private money in medicine. And
Oh, interesting.
Oregon is one that recently passed a law about private equity in healthcare. And so that's interesting. There's a little bit of backlash against that. So when someone is thinking about starting a business, maybe you're in that boat. What are some of the maybe what's one or two pitfalls that you could fall into from a tax or bookkeeping perspective when you're starting your business?
The ones that I usually like to hammer on are make sure you keep the business assets separate from your personal assets. Even if you don't
Mm,
have a separate legal entity yet, even if you're just operating under your own name, get a separate checking account or a separate credit card, whatever it takes, so that you don't accidentally mix things up between the two. And the reasons are twofold. One is that it makes your bookkeeping really easy if everything's all in one place. You don't have to go hunting around and say, this one was, what was that thing from Amazon again? Was it the, yeah, it's all just
mm,
in one place. And then second of all, if you ever do get audited by the IRS, it's much easier to make the case that, hey, this is a legitimate business and I'm not mixing things up because they're all in this one account and all the records are in order.
yeah. Those are great things. You have the corporate veil, right?
Exactly. Yes.
Term,
Yeah.
which I learned, and I think about that quite a bit because I have separate accounts, right? And I've been in corporate world in HR, and I've had the company credit card or whatever. And there's certain restrictions that don't buy this, or and so you have to keep that stuff in mind. I'm curious if I'm out and I buy, maybe my wife and I are having tacos or whatever, and she's listed in the corporate formation documents and stuff. Can I say that is a legitimate business expense if we talk about the business? This is just between you and me, Steve.
This is a question I get a lot.
Is that a gray area? What's the official line there? And how much risk do you expose yourself to with that stuff?
The test that the IRS will apply is called ordinary and necessary.
Okay.
This kind of two prongs. So one, ordinary means, is it normal for folks in a business like yours to have expenditures like this for the thing that you did? Taking corporate officers out to lunch or dinner to discuss business, that's a normal thing. So it probably qualifies there. And then necessary is it necessary to operate the business? Would it have a detrimental effect on the business if you did not do these kinds of things, make these kind of purchases? That one's a little more of a gray area, so you can probably make the case for
Yeah.
that. If both of you are corporate officers, you're discussing business, it's probably, yeah.
Gotcha.
Keep the receipts.
Okay. Keep the receipts. Yeah. If the tacos were really good, does that have an effect on the outcome at all?
Yeah, boosting employee morale.
Yeah, boosting employee morale, exactly. Yeah, so these are the realistic things that you don't know
Mhm.
when you're starting a business. Oh man, can I do this? Can I not? Not that anyone sets out to abuse the system. They want to obey the law, but these are the things that come up.
I'm a big fan of keeping good records and
Mhm.
documenting things so that you can take as aggressive a position as is warranted. And
Mhm.
then if you have to defend it in an audit, you've got the receipts, you've got the documentation to back it up.
Yeah.
So that's the position that I like to take with clients.
Okay, sure. Document. This is a weird situation. In fact, I was out traveling and my personal credit card got locked somehow. I think there was some
Mm,
fraud or something. And then all I had was my business card, and it wasn't a business trip or whatever. And so I'm like, I got to pay for this gas with my business card. How do you
mhm.
deal with that sort of a situation?
That happens. You can, on the back end in your bookkeeping, you can categorize those transactions as an owner draw if it's an LLC, or a distribution if
Mm,
it's an S corp, but it's basically the same thing. As this was business money, the owner took it out for their personal use, and will mark it that way in the books, and then it'll
okay,
show up properly in the bookkeeping that way.
nice.
It
Good to know.
happens.
It happens. Whew. I was worried because I was looking over my shoulder to make sure that the agents weren't coming after me. Is there less? So I'd like to get into oversight and enforcement for a minute, because so if someone's a new business, are they less likely to get audited, or are they just as likely as any other business to experience audit oversight?
That's a good question. I don't actually know the numbers there for new
Mm,
businesses versus established ones.
yeah.
I If it's a low dollar amount, you've
Mm,
got small revenue, small expenses, you're probably less likely than the
yeah.
larger ones where there is more opportunity to abuse the system, but I don't actually know.
Yeah. Okay. No worries. And then I'm curious about if you've noticed any trends in enforcement, if you've seen more clients getting contacted by the IRS, more audits, if you've
Mhm.
heard from your contacts, do you perceive that there is more enforcement? Because right now we're in an environment where you would think a Republican president, especially one who's very much into cost cutting, we've seen a lot of
Mhm.
cost cutting in the IRS lately with Elon Musk and Doge. So you would think there would be less enforcement and less people to do that enforcement. But actually, I heard from a labor attorney recently that, a labor case that they thought was dead, the feds came after the employer for a large judgment or fine, and it's almost like they're trying to get that revenue back through enforcement
Mm.
methods. So I don't know, do you have any
I
perception
could
on
see that.
that? Yeah.
Yeah, it does seem the IRS has lost a lot of employees this year. We don't know the exact number because it's a little hard to calculate with the way that
Right.
was structured. But yeah, so I imagine eventually enforcement actions may suffer on that regard. However, what my clients have been seeing is there's still plenty of the automated kinds of enforcement that come into play. For example, if you file your tax return late,
Mm.
there's a failure to file penalty, and that will send a letter, and that's pretty easy for them to calculate automatically. And so I think those are mostly just computer generated. A human doesn't have to evaluate the facts and circumstances before sending one of those out. So those are still arriving. Interest for paying your taxes late, not just filing the return, but also paying the amount that's due. Those are still coming. Other things like, if you, this is a common one that I'll see with tech employees where they have RSUs, restricted stock units,
Mm.
that as part of their compensation, it shows up on their W-2 when they vest. And then when they sell them later on, the broker doesn't always report the basis to the IRS. And so it'll show as the basis was zero and they sold it for $50,000. And the IRS says, hey, where's the tax on this $50,000 of gain you had? And they'll send a notice for that. Also an automated thing, just in the back end of the IRS matching things up in their database. And they'll say, hey, can you explain this to us? Because otherwise we think the tax bill should be X. And then those are pretty easy to work with. We just say, here's the W-2, here's the statements from when the things have, here's all the numbers. The original return was correct. And they'll agree with that if it's correct.
That brings up a great point, is if you're engaging in any kind of an equity transaction, whether it's an RSU, or if you're a doctor and you're getting out of an equity investment situation,
Mm.
there's going to be transactions there, and God knows I cannot help you there. And so that's something that you can help with, I take it.
And that's another place where you need to have really good records, like of what,
Mm.
so we can calculate your basis properly. What did you originally pay for this, so that when you go to sell it, we can calculate the profit correctly, so that you're not overpaying on your taxes or double paying for money that you've already been taxed on, kind of thing.
Yeah. Yeah. Okay. Interesting. We don't want that to happen at
Yeah.
all. Is it, do you have clients who have multiple businesses, and does that introduce new complexity, or is it just a matter of keeping things separate? What comes to mind if you've got multiple businesses?
It is more complex in the sense that there's additional returns to file, and but as long as the books and records are kept independently for each business,
Mm.
it's not, if they're all intermingled and we've got to tear them apart, of this one was for the rental property and this one was for the business, that's a little more complex. But if you've already got them in separate accounts, then filing the tax is usually pretty straightforward.
Is it okay for if a business, if you have one LLC but multiple kind of types of businesses under one, is it
Mm.
okay for things to be intermingled there, or is that considered not a good way to structure your accounts and stuff?
That can work if the business, like the thing that gets reported on the tax return is the business entity. So
Right.
either you as the sole proprietor or the LLC. And even if it's got multiple brands, multiple DBAs, doing
Yep.
business as, like trade names. So for example, if I've got Daybreak Tax LLC is the actual LLC underneath, and it has a DBA of Daybreak Tax, because that's easier to say than tacking the LLC on the end. But if I decided, hey, I want to start a new business line that's still accounting related, but I'm going to call it something else, and I hire folks to do that side of the business, and they're separate operationally, but they're still under the hood related, that all still rolls up on the taxes under that LLC. So I don't know if that's what you were getting
Yeah,
at,
yeah,
that
absolutely.
question.
Yep.
Yeah.
When someone's thinking about, so maybe I'm a doctor, or I'm a nurse practitioner, and I'm starting a med spa, and maybe I'm thinking I need to have an employee. What are things you need to be thinking about from a tax standpoint?
The main one is that the IRS takes very seriously payroll taxes on when you're paying an employee. Like
Mm.
those have specific due dates. There's very high penalties if you fail to send the money to the IRS. The reason is, like, you're withholding on behalf of the employee some of their taxes, and the IRS needs to make sure that money actually gets to them, so that when the employee goes to file their taxes and they're getting a refund or whatever, the money's already come through the system properly. If you're holding on to that payroll tax money in order to pay bills in the meantime, like that can be a real slippery slope, because the penalties just stack up, and that you could
Mm,
get into a spot where you can't pay everything back. So that's the
mm,
first one. Make sure you've got the cash flow to support the payroll, the fully loaded cost of this employee, not just their salary, but also the taxes and the health insurance and everything else that you've got to pay for them. Make sure that's all in order first. And then, not really tax related, but there's a lot of employment law things that I can't speak to, but you should have a good business attorney that can help you draft those contracts and make sure you're on the right side of worker classification
Mm,
and all of that kind of stuff. Don't pay them as a contractor if they're actually an employee and you have control over where and when and how they work, that kind of
mm.
stuff.
Yep. Now that's definitely some area that folks can get into trouble with.
Mm.
It's not intuitive with the contractor classification, that's for sure.
Yeah, there's a lot of factors that can come into it, and it can be a gray area there.
Yeah. Tell me about, so you've been at this for a little while. What is a typical, how do you work with your clients? What does a startup kind of typically look like when you're working with someone?
Most of the small businesses, when they're just starting, they might just need me to do the tax return. If you have a small business, especially a side business, you can do that yourself in TurboTax or H&R Block. Like, that's perfectly reasonable. But there's a lot of folks where that's like a bridge too far, and they don't want to deal with the complexity, even if they know their numbers and they could handle it. But they would just like someone who's been through the experience before to guide them through it. Totally fine. There's also businesses where it's gotten complex enough that they don't have a handle on all of the tax implications, especially long-term things, tax planning, depreciation, all that kind of stuff, where you really need somebody that just focuses on the tax law to be able to say, hey, your business is structured this way, and there's these things that we could take advantage of, or hey, there's a red flag here that we got to watch out for because 5 years down the road that might hit us, and that kind of stuff. So that can be. Point being, there's a lot of good reasons to hire a tax professional, even when you're just starting out. And
Yeah.
then your question was how I work with clients. So I've got two ways. One is if you just need the tax return done, we can do that. The other way is if you want to be able to meet with me throughout the year, ask questions whenever you want, having me on retainer, then I've got plans for that where you get a little more guidance and education throughout the year. I can help you with estimated quarterly tax payments, all that kind of stuff as well. And then also do your tax return. If you do it throughout the year, then by the time you get to filing the tax return, it's almost an afterthought. We're just like reconciling all the statements up through this point, and then here's the numbers, and then we're ready to go in January, February, potentially.
Cool.
It can be good.
Yeah, I'm a fan. I'm a fan of getting help. If you're starting a business, anything that you can take off of your mind so that you can focus on growing your business, because that's what you need to be able to do. You need to market yourself, focus on how you're going to execute, and the stuff like HR, stuff I help with, or the tax stuff that you help with, or operational stuff. Those are things to get help with so that you can really crush the business development and the execution, in my opinion. And I'm sure the folks that you work with probably have really appreciated that support.
Yeah, and there's a lot of power in hiring a fractional person like me, I believe, like you as well, where you're not hiring us like full time to come in and do just that for your company. You're just hiring us for the expertise that we have, and we can help you with that. And we also help lots of other folks with businesses like yours, and so we can spot the trends and help you gauge them as well. And that's a good way, especially early on, where you just need to get some things off your plate so that you have more space to focus on the part that you're really good at, being the owner and the entrepreneur here of running the business.
Yeah, and those very fractionals that you're mentioning, they need you, I think, right? They need you because they have their own LLCs and their
True.
own
Yeah.
sort of tax issues. And so I'd love to. So, how can people get in touch with you, Steve, if they're interested in working with you or understanding how you can help them?
Sure. My website is daybreaktax.com, and my email is steve@daybreaktax.com. You can email me anytime. Happy to
Awesome.
chat.
Cool. Steve, I really appreciate you taking time to chat with me. I think that taxes may not be fun, but what is less fun is getting in trouble with your state or the
Mm,
IRS and getting caught flat footed and being overwhelmed with this administrative stuff when you don't have help. And consider working with a person like that. And I appreciate your expertise and letting me pick your brain. And so
yeah.
you're a great person for people to know if they're starting a healthcare business or a solopreneur operation, because you need to get that help. You need to do your taxes right. And that's what this show
Mhm.
is all about here on Healthcare Leadership Live, helping you be more effective as a leader, whether it's for the financial, the marketing, the operational. And so, everyone that's been listening, thank you for joining us here today. We've got more episodes coming up for leaders in the healthcare space to help you be more effective. And I hope that you'll find that our conversation today helps you take meaningful action in your business. So, if you're out there listening, please follow, subscribe. Check us out on all of the podcast platforms and YouTube. Now go out there and lead with confidence.